Hey, what's going on, everybody? Jonathan here with my good friend Dave. We are going to discuss equipment financing. But first, before we get into equipment financing, I want to let you guys know that SBA Express is still available, right? We call it the Flash Cap program. And we've gotten in about, I think, 30 to 40 people. And out of that 30 to 40 people, I think we have a 95% pull through rate. All right. So just think about that. You guys are unsure or you want to get some uh, some really cheap financing heading into this recession, I would jump all over that. And most of these guys are getting done in 14 days. All right. And here's the cool thing: if you do qualify for more, because your business is doing, let's say, a million, 3 million, 6 million, you can get up to 450. You can keep going in and applying every, call it, 6 months. So a lot of our larger clients are doing just that because it's so much easier than going the traditional 7A route. So we've been talking a lot about that program. It's still open, still available. If you guys need help, reach out. But I want to talk to you guys about equipment financing. So you should never, ever buy equipment cash. Tons of reasons, but cash is king. Buying equipment financing or buying equipment using financing helps you build your business credit, and it puts on what we call comparable debt. All comparable debt means is that it shows that you've built or you finance things under the business name before. This does not go on your personal credit, right? So if you're going to buy a house, it's not going to have an impact. But when you go to buy equipment or other pieces of equipment and they see that you have comparable debt on there, you'll be able to get approved for more and you usually get cheaper rates. So I know Dave, he hasn't really done a lot of equipment financing. He had a bunch of questions for me. So Dave, let's roll. What do you got?
Yeah, so financing. A lot of people think like I thought about it was like when you do equipment financing, it's like heavy equipment, construction equipment, like CNC machines. But equipment financing is more than that, right? You could use it for your businesses, like to buy office furniture, right?
Yep.
And
Yeah,
things like
you
that. It's not just big, giant equipment that you think to manufacture. You could use it for a whole range of products, right?
correct. The smallest deal I ever did was like 8,000, and that was to outfit a food truck with all the equipment it needed.
Yeah.
But you could do it like if you're buying a restaurant or you're renovating a restaurant. Let's say you need new kitchen equipment, but you also need new tables, chairs because you want to renovate it. That can be included in there as well. Believe it or not, some types of software can also be considered equipment financing. My
Okay.
rule of thumb is as long as the total invoice or everything that you're trying to finance is over 10,000, it's worth doing.
Okay. Perfect. And then another question I had was, uh, what options are there for equipment financing? Is there like lease to own at the end,
Yeah,
or
yeah,
I've heard you talk about that? Is there just other products that we can do with it?
yeah. That's it. All falls under equipment financing,
Yeah.
but traditionally you can lease equipment. Now, here's the challenge with leases. The benefit is whatever the full payment is, you typically can write that off. Okay, but at the end of it, let's say it's a lease and you give it back to them. That's not on the company's balance sheet, so it's not making your company more valuable, right? It's not an asset, it's a liability. Um, or what I don't like about leasing is a lot of times in a lease, they have really fine print, like small fine print, that says if you don't cancel, they're just going to release it to you. Okay, so now you're leasing a piece of equipment at the same rate and it's worthless. Okay, so you're paying probably 5 to 10 times what it costs. That was a big play in like merchant services back in the day. Is like they would let you lease these terminals that would only cost 200 or $300 to buy, but you'd be leasing them for $50 a month for 5 years.
Yeah.
All right. So I do not personally like leases. Now, when it comes to financing, there's really two options. It's a straight finance like you would a car, right? So
Yeah.
think about any car that you've purchased. You're just making principal and interest payments the entire time until it's paid off.
Yeah.
Or what you can do is you could do a lease with a dollar buyout at the end. Okay, so it's a predefined. So basically, it's structured as a lease, and then at the end of it, you can buy the vehicle for a dollar.
Okay.
Why are both of those options better, in my opinion? Well, one, if you do a straight finance, you can write off, the interest, and you're depreciating the asset, but the asset's still owned to that company, to your company.
Yeah.
The second part is if you do the lease, obviously check with your accountant. I'm not an accountant, but basically what'll happen is you can, again, depreciate. At the end you could depreciate the asset. There's a lot of different ways that you could structure it. Either way, I recommend buying as opposed to leasing it, because it's just going to be safer and you own the equipment at the end.
Yeah.
All right.
Cool.
Now, a couple things. Lease it when you're doing a equipment purchase. You're going off of your personal credit, your business credit, your cash flow, and if it's over 200,000, they're going to ask you for financials and tax returns. All right. Typically, you want strong business credit and strong personal credit with comparable debt. And there's times if it's under 100K, you really don't need a lot. Like you can do it without bank statements. It's called app only. If you have a very large company, you can do what's called corp only. And that's if you have enough comparable debt, the company can guarantee it. But I very rarely see that because even the ones that do qualify don't have enough comparable debt. So typically that's why when you have somebody that wants equipment financing, that's why I always say just collect everything, because you don't want to have to go back.
Yeah.
Okay. Now, typically, all you need is an application, 6 months of banks, a tax return, and the invoice for the piece of equipment that you're purchasing.
Yeah.
A couple tricks with this: don't purchase old equipment. Meaning, if it's more than 9 years old, it's going to be very hard to finance unless it's really valuable. All right. And if you're buying from a private party, make sure you get a purchase and sale agreement and everything's documented. You know the make, model, mileage, hours, condition, whatever you need, the VIN, the serial number. Those are all important items that can hold up a deal. And now, what I've ran into a lot is if you're going shopping for a piece of equipment, make sure that the vendor or the supplier, whoever you're buying it from, actually has the unit. Okay, and if they don't have the unit, try to figure out how long it's going to take them to get it, or if you buy it today, when can they deliver it? Because there are massive supply chain issues with equipment sales right now. All right, and if you do have to purchase something and wait on it, what we can do is one of our lenders or one of our underwriters has like a 3-pay, meaning they'll do a third of payment for the first 3 months, and then catch up on the end. This way, you're not coming out of pocket. Because I had a great client of ours. He bought a Bobcat, like a skid steer. Took him 9 months to get delivery. It's crazy. And then here's the other thing. When people are going shopping, this is one big mistake I see. When someone's going shopping for equipment, if you find it, put a fucking deposit on it right then and right there.
Yeah. Yeah, I was thinking about getting a new truck, and every dealership is like, "Oh yeah, you got to put $1,000 deposit, and you'll see it in 9 months." It's like, all right, I guess that's what you got to do. So there's a big supply with everything. So, and then another question I had is, I know if you're just getting started and you need equipment, can you still qualify?
You can.
And then what are the stuff that you would need to qualify? Because I know we have like startups and established businesses. So if you're just starting out, what would you need?
If you are a business that's in business under a year, I would tell you you're going to need 700 credit and home ownership.
Okay.
If you don't have either one of those, there are other programs that you can use, like a term loan or something along those lines, to get that equipment. Typically, when you're doing startup equipment, the rate's way higher, like way higher.
Yeah.
If you're in business a year or two and everything looks good, it's real cheap, like single-digit interest rates.
Yeah, because you're lower of a risk because you've already been established.
Exactly.
Okay. And then what do some of the lenders consider an established business? Like, what are their parameters for them to consider you as an established business?
Universally, it's accepted at 2 years. So if you've been in business 2 years.
Okay.
There are some lenders that will take it and consider it after it's been in business a year. Otherwise, it's going to go into that startup financing bucket.
Okay, cool. And then, are there any markets that it's hard to get qualified for equipment financing? Like, say,
Not
if you're in the
really.
medical marijuana and things like that, or
That's a good question. So you can do
ammo
CB.
or something?
Yeah, no, ammo's fine. Ammo,
Okay.
there are no issues. You can do CBD. You can do medical marijuana. Here's the caveat: it has to be something that other industries can use.
Okay.
Okay, so like, let's say it's a tractor, that works. If it's grow lights, that works because a farmer could use those.
Yeah.
But if it's only specific to that space, then that's when it gets challenging.
Okay. Cool. And then, I know you talked about some of the advantages of using equipment financing to help improve your credit. What other kind of advantages can you get from it, or for using equipment financing? That way, you're not spending your cash that you have on hand, and you have it in
Yeah,
case an emergency happens. And
the main thing is you're keeping your cash in the bank, you're building your business credit, and you can write off the interest. Right? And think about it. When you're financing, when you're using equipment financing, you're paying it off over, let's say, 3 to 5 years, sometimes 3 to 6 years. And that's typically how long you're going to be using the equipment. Maybe some of that equipment lasts a little bit longer, but that's really the ideal sweet spot because you never want to pay for something longer than what you're going to use it for. Like somebody told me, oh, I'm going to get a Sprinter van and give me 20-year financing. That's a horrible idea. You're not going to be using that Sprinter van in 20 years.
no,
You know what I mean? Same thing. Like, you don't want to pay for a Sprinter van in a year. Why? Because that cash could have been utilized elsewhere.
yeah, you could use that to grow somewhere else.
Exactly.
Nice. Yeah.
What else you got?
I think that was it. You answered a couple of my questions right out of the gate.
Those are some good questions, man.
So,
I like that. I dig that.
Yeah, that's what I got for right now. Jot it down, but yeah, I think that's about it for what I have.
Awesome. Well, guys, if you need help with the SBA Flash Cap program or you need help getting equipment financing, let us know. We are here to help you. All right. I appreciate you guys. Dave, thanks for coming on.
Thank you for having me.
Yep. Anytime, man. I'll see you next Monday.
Yep. See you next week.
All right. Bye, guys.
All right. See you.